Welcome back to Crypto Risk Office Spotlight. In this series of interviews, we are dedicated to investigate and, more importantly, to raise awareness about risk management and compliance best practices within the crypto ecosystem. Join us as we navigate the intricate landscape of this dynamic industry and shine a spotlight on strategies that can empower you to operate within it with greater safety and confidence. Disclaimer: what is discussed in this podcast is not meant to be nor has to be considered financial advice. So without any further ado, let's dive right into today's topic: Crypto Compliance Unveiled, a conversation with Meera, Head of Compliance Middle East, Africa and South Asia at Binance. So let me welcome her. Hi Meera, how are you?
Hi, morning Alessia. I'm wonderful. How are you?
I'm very fine, thank you.
Fantastic.
So you know, we are both in Dubai. The weather is beautiful, and it would have been nice to be together, but I think technologies wise today we decided to host it this way. And
no, absolutely. And I would say it's a bit too early for wine this morning, but next time for sure.
Exactly. Soon.
Absolutely.
So as we have a very, very important agenda today, and also it's very rich. I would like to thank you for finding some time to be here with us today.
I feel very honored.
Oh no, thank you so much. We also are very honored. And I also would like to, just cover a little bit what we're going to discuss today. So our viewers that are aware of what we will touch on. So we'll start covering from regulatory landscape and challenges, AML, KYC best practices, to security, data protection, market integrity and surveillance. And then we will talk about international compliance and collaboration with regulators to end our conversation with the future of compliance in crypto and innovation. So Meera, I think let's start talking about yourself, talking about your background, and when did you first enter the crypto Web3 space?
Sure. So for all of my sins, I've actually been a risk manager for the majority of my career. I've worked in traditional finance for that. My first job actually was at Lehman Brothers, just after the financial crash. And I worked within the banking sector, the clearing and exchange sector for most of my career at clearing houses in London. So the Intercontinental Exchange and also CME, Chicago Mercantile Exchange Group, in risk, mainly covering things like derivatives. And then I was lucky enough to get an opportunity 6 years ago, actually, this week, to move to Dubai. And I moved with a broker-dealer firm, again, as a risk manager and as a business manager. And my boss then came to me after about 3 years and he said to me, "You're really good at law kind of stuff. You're good at rules. You're good at regulation. You understand, all of this having come from an exchange. Why don't you consider compliance?" And let's be honest, it's not really the sexiest job. But I thought, you know what, in order to get my skills,
lawyers and stuff.
Because I'm traditionally, I have a risk degree. I don't actually have a legal degree or anything like that. It's quite a specific degree. I thought, okay, let me diversify my skill set, essentially. So I did a course here in compliance. And I found it really fascinating and works really closely together with risk because it's a second line of defense function. So I took on that role as the chief compliance officer for that firm, as well as the chief risk officer. So covering things holistically. Then I got a little bit bored, if I'm very, very honest. I'd been in the market for ages. I'd covered derivatives. And I saw an opportunity as a consultant where I wanted to learn a lot more about crypto. It was something I had never understood. I'm a little bit older. I'm not like all these young kids who understand Web3, etc. So I thought, let me try something to do with crypto. And I got on a project with crypto with a company called Binance. And I honestly had no idea who Binance was.
It just happened to be the first exchange in the world.
Literally, I had absolutely no idea. All I remember is the person who was running the project would eventually end up being my boss, and his name was Matt Gamble. And he used to work for the FSRA, the regulator, the head of authorization, and he's very well known within the marketplace. He's no nonsense, and he knows compliance in and out. And I felt really honored to be working for him because he was amazing. And then whatever ensued, I actually left the consultancy and I managed to find a role at Binance. And here I am today as the regional head of compliance. I also am the regional head of risk. I'm also the CO MLRO for our Dubai entity and also the head of risk for our Dubai entity. So yeah, I'm definitely going to jail if something goes wrong. So I'll try and make sure that everything is
I
done
really
properly.
hope you won't get 100 years.
Me too. Exactly. So yeah, that's my story. But I think the baseline of me telling you that is it's never too late to number one, change your career, and number two, learn about a new asset class in particular. I'm learning things about crypto every single day. And one of the books that I use is Crypto for Dummies. Really very, very simple book.
Good tip. Thanks.
Yeah, absolutely. And it's a lot of the juniors within my team who actually recommended it. So I learned a lot about crypto from there, and it's constantly a learning and evolving space to be in. And it's super, super interesting. Keeps you on your toes.
Yeah, no, definitely. I hear you big time because I also don't have that kind of background, and I just got passionate about it, reading and researching, and it kind of all makes sense. At some point, you really understand that it's the future for me. This is how I see it. I just want to be on the right side of the story,
Yeah.
Anyway, thank you for this amazing intro and fascinating to share with us your fascinating story. Always great to hear what brought people into the industries. Let's start talking about regulatory landscape and challenges. So can you provide an overview of the current regulatory landscape for cryptocurrency exchanges? And what are the biggest compliance challenges you face in this ever-evolving environment?
The first crypto regulation was, I think, issued about 5 years ago, and this was under the Central Bank of Bahrain. They've been very forward in their thinking, and they implemented Volume 6 of their rulebook, which is the crypto rulebook module. And essentially, they have a comprehensive rules-based approach that they have implemented, which affects not only exchanges, but you have broker dealers, you have investment managers, you have asset managers. So it's extremely comprehensive, and it's very rules based. Now, if you look at the UAE was the second the second region to come up with regulation, and it started all within the ADGM, the Abu Dhabi Global Markets, which is a free zone within the UAE under the FSRA, the Financial Services Regulatory Authority. And actually, my old boss, Matt, was one of the prominent members of the team who implemented this. You see a whole host of regulation there. And what was happening is we had a huge influx of people from the US. We had Kraken, for example, and Europe come in. And then all the other regulators decided, there's an opportunity for us here. So the DFSA and the DIFC then issued their regulation on November the 1st last year. And then the year after that, towards the end of it, you had the Virtual Asset Regulatory Authority, which is under Dubai in particular. And it's been delegated authority by ESCA, the Securities and Commodity Authority, which is the onshore regulator, to be the first of its kind regulator simply for virtual assets. So it's an interchangeable term that we have within this part of the world. It's either called a crypto asset or a virtual asset, and we generally call it a virtual asset. So the first issue that we're going to have is we're going to have regulatory arbitrage between all of the regulatory regimes. Because when a new firm wants to come in and either set up a broker dealer or an exchange, they look at, okay, where should I be regulated? Where will provide me with sufficient enough regulation to protect my customers, but also not at such a significant cost? So one of the things that we at Binance have done, for example, is we have an exchange in Bahrain, we have an exchange in Dubai, and we have multiple entities in Abu Dhabi. And we've set them up having done a cost-benefit analysis of where we want to be. So that's the first thing, looking at regulatory arbitrage and trying to mitigate that. The second thing you have to look at is the offerings that the regulator provides you. So when it comes to crypto assets or virtual asset tokens, the different regulatory authorities only approve a certain amount of virtual assets. So under the DFSA, as of November the 1st this year, they only approved 5 virtual asset tokens, which gives you a very limited scope on how many cryptos you can actually deal with. Whereas if you look at the FSRA, they have approximately 150. And if you look at the VARA as we'll call it going forward, you have again the same 150. So if you're a traditional finance company who wants to dabble, I would say, within crypto as well, you want to have portfolio margining, you just want to look at something else, I would go with the DFSA from a regulatory perspective, because you're going to deal with, old school Bitcoin, Ethereum tokens. But if you like us, where you're a dedicated virtual asset exchange, you're going to look at places like VARA and the Bahrain exchange in order to offer your product to provide you with user protection. And then finally, the other thing you have to look at is the deliverable timeline of how long you want to wait for your application to be processed. If you're looking at putting an application in with the DFSA, you have to understand that they are looking at multiple asset classes. So their compliance teams and their regs teams will have expertise not only in virtual assets, but also in equities, FX, derivatives. Whereas the dedicated resources in VARA only focus on virtual assets. So they understand the specificities surrounding virtual assets, and your time to market can be far quicker because you're focusing on only one asset class.
So, amazing. Thank you very much for, mapping the regulatory landscape. It was, all in there. So I really recommend you, if you're trying to set up a business here, to listen to this part, because very, very useful. So moving on to anti-money laundering and know your customer practices, how do AML and KYC practices work in the context of a crypto exchange, and how do you ensure compliance while also respecting customer privacy?
Sure. So in the UAE, customer privacy is taken very seriously. So we have, multiple data protection legislation. In particular, you have the UAE Data Protection Act here. When you're looking at a free zone, for example, if you're doing, say, our FSRA-based entities, you have equivalents to what we call GDPR. They have their own data protection regime. And what we try to do is, because we are servicing multiple clients from multiple regions, one of the things that we do within the Middle East is we uplift all of our data privacy to the GDPR level. So if you're a European client, for example, in order for you to feel comfy that all of that your personal data that you send to us is protected, we level it to that standard, same as in Europe. Now, when it comes to KYC and AML, you would think, given all of the negative headlines associated with crypto, that the compliance standards are a lot lower than they are in traditional finance, but actually they're a lot higher. So let's start with the onboarding suite of things that you have. You'll have simplified due diligence, customer due diligence, and enhanced due diligence. We onboard every customer, and we must do a KYC or a KYB, know your business, onboarding for corporate entities. You then have, as you map yourself along the maturity of the relationship, you have things like market surveillance in place for all trading. So similar to how you would in TradFi, we look at things like front running, wash trading, any type of manipulation that somebody can undertake in the TradFi world, we've mapped that to the virtual asset class. You then have transaction monitoring as well. And transaction monitoring is not only for on-chain. So you use tools similar to Chainalysis, Elliptic, TRM Labs, which essentially goes through the blockchain and it checks where your money is, who is it interacting with, who is funding it, how many hops has it gone along to. You also have off-chain transaction monitoring as well on the fiat side. So you have a real comprehensive suite of controls there. You then have what we call the travel rule, which is under the FATF recommendations, to make sure that where you're moving your money to, you understand who the beneficiary is. Now, I'll caveat this. Most crypto or virtual asset firms have not implemented the travel rule as of yet, because there's multiple products that are out there. Most people will know Nota Bene, for example, as your solution. But in order for the travel rule to actually work, you all need to be on the same protocol so that you could exchange information in the most data protection covered way, but also by ensuring that You're dealing with the sunshine rule. Sunshine or sunset? I always get it wrong. Anything to do with the sun makes me happy.
Yeah, me too. That's why we live in Dubai, isn't it?
And you all have to be on the same protocol to share the information. So that again is a challenge because not a lot of people have that implemented as of yet. But again, customer privacy is at the heart of everything that we need to do. And we protect that very, very heavily because, you know, you are sending a slew of information to the exchange, but it is to protect the user ultimately at the end of the day. So we have that implemented across the scope. And thanks to, you know, if you look at the way that we've been regulated, and you can see that we are the first exchange in Dubai to have been given the MVP operational license, we meet all of those requirements. And those are not only just at the VARA level, they're also at the UAE federal level.
Yeah, no, it's very good to hear, and thank you for sharing. I think my next question is on the security measure and data protection. So we keep on this flow. Security is kind of you know, what crypto has been ultimately lately known as a not very secure place. After everything happened with FTX, etc. So the sentiment of the public opinion around crypto in terms of security has been not too positive. So to understand more what the first exchange in the world does, what security measures and best practices do you employ to safeguard customer funds and data? And how do you balance security with user convenience?
Sure. So one of the things, obviously, from the FTX fallout, as we saw, is rules were broken, and the most sacrosanct rule was broken. And the sacrosanct rule is client funds are client funds. They must be fully segregated away from house funds, right? So in the TradFi world, they're either called prop funds or they're called house funds. But one of the things that we do in particular is we have dedicated client money segregation in place. In our Dubai exchange, for example, we not only have segregated cold wallets, we also have segregated hot wallets. And that's one of the things that, you know, it's a message that we have throughout the organizations. Client funds are fully sacrosanct and we will not have them commingled in any way. Myself personally, having come from traditional finance exchanges, traditional finance clearing houses, it's the baseline minimum standard that you must have, because in the event of a bankruptcy event, you need to ensure bankruptcy remoteness and you need to ensure that client funds can be given back to them. So that's one of the first things that we have. We also have something called a SAFU fund, right? Essentially, it's a safekeeping fund where money is held to help deal with cyber security events, particularly. So if there's an operational risk event or a cyber security event, you can essentially go into the SAFU fund or request funds to help you. As an insurance, it's deemed like an equivalent to insurance to help repatriate some losses that you may have. We not only have that at the Binance level, so at the .com level, but we also have one locally as well to assist our local customers for the Dubai exchange. And then the third layer of protection that we also offer to clients is we have insurance in place, which is now a preliminary that you need to have in order to operate within UAE. It's to ensure that your wallets are actually insured. It's usually 5% hot, 95% cold, but it's kind of movable between 595 and 1090. So there's 3 layers of protection that we have for client assets, and they must be fully, and you know, remember, all of these things have to be looked at from a record keeping perspective. So there's a full reconciliation done on a daily basis of all of these assets to ensure that your books and records match accordingly, that whatever you say is in that wallet is actually record keeping requirements, and it's in the ledger accordingly. So it's very comprehensive.
Yeah, no, it is, and it sounds like it. And you know, I think it's very good that some practices and best practices are being lately implemented into the crypto space. Is what from TradFi, because it's what also we needed, right? A bit of security security and certainty that we could operate within this ecosystem in a safe and secure way.
Yes, absolutely. And how I like to benchmark it is, if it was my mum's money, would I feel safe giving it to certain places, right? And so that's kind of my benchmark for me. If it's my mum's money, not my money, but my mum, far more important.
Okay, yeah, more important. Yeah.
More importantly, where would I put it? And I would put it with us in Dubai for sure, without a doubt, because I know that money is going to be protected, it's going to be segregated, and I don't have any concerns there.
Well, very good to know, Meera. I'm sure many of investor traders on Binance would be happy to hear as well. When it comes to international compliance and collaboration with, let's do a step backwards.
Yep.
Skipping forward. Now I wanted to talk before international compliance about market integrity and surveillance. So could you explain how crypto exchanges monitor and prevent market manipulation and insider trading, and what measures are in place to maintain market integrity?
Sure. So this is, in particular for Binance, it's a value that's held at the top senior management level, particularly with our big boss, CZ. We have a very strict internal personal dealing policy. It's extremely strict. And the reason we do that is to ensure that we have market integrity. So it's very clear. We get training on it at least every quarter to remind everybody of it. And essentially what it means is it puts a cap on when you execute a trade. So for example, if you were to go long on a trade, there is a minimum period that you have to wait in order to go short on the trade. And the baseline of this essentially is, our job is not to be a day trader. And CZ will tell you this all the time. If you want to be a day trader, don't work at Binance. That's not what you're here for, right? Yeah. Ultimately, you're here to do a job. And so it discourages that type of behavior. And it also ensures that if you were to ever hold any insider information, you would be completely constricted in being able to execute on that. So it's very strict. And I'll be very honest with you, we have had people in the past who have breached it, even by a day, even by half a day. And there's a no nonsense, no tolerance policy to that. We have internal audit in place as well, which monitors and manages all of your conflict of interest and all of your declarations. So not only do you have to declare when you start at the firm, you also have to declare inter-year and at the end of the year that you haven't breached your policy. So again, it's extremely strict, but it ensures that you maintain market integrity. So that's for us as staff members. When it comes to market surveillance, we utilize tools that can be offered by providers such as Eventus, NASDAQ, very, very similar to how you would have in the TradFi world. And essentially what you do is you feed in your data into these systems and it implements market abuse controls. So it covers things like front running, wash trading, churning, pump and dumps, etc., to make sure that if you look at the market and you look at the way that the order book is moving, you're mitigating those risks. Now, in the event that they find that there's any type of market abuse, there's a full investigation that will be implemented, because we have a huge market surveillance team, not only at the .com level, but also at the local level. And it will be investigated end to end. And potentially, if you're seen as having created market abuse in any way, you will be offboarded, a SAR will be filed, and potentially there could be some sort of litigation action against you, depending on the country that you operate in. So again, it's extremely comprehensive, and it's something that, you know, as the world's largest exchange, we have that depth of market. We want to ensure that we protect against any type of market abuse.
Yeah, no, very good to hear that you have all this policy in place. I think gives some sense of confidence.
Yes.
Also for people joining.
Exactly.
So let's move on now on international compliance and collaboration with regulators. How do you navigate varying international compliance requirements, and what strategies do you employ to collaborate with regulators, bodies from different countries to ensure compliance?
Sure. So what you might not know generally is we are the world's most regulated exchange. So we actually have the most registered or regulated CASPs or VASPs in the world. This covers LATAM, Europe, MEASA, where I cover, as well as APAC. So that shows you our dedication in the evolving space of crypto regulations to wanting to comply with that. We have the largest concentration, I believe, in this part of the world. And it's because we've seen such a huge progressive adoption of regulation here, but also the government is so Web3 focused and so wanting to bring the country up to speed, particularly with the implementation of blockchain and Web3. So we work consistently and together with regulators. We have extremely good relationships in a lot of countries. I know, obviously in the US, you see a lot of the headlines, but when it comes to the rest of the world, where the majority of our users are, we have a very good relationship in place with them. We want to work with regulators, and in particular, a lot of us have actually come from regulators. So a lot of my team have actually come from the regulators. So when you have that in-house knowledge of the minimum standards that you need to comply with, you implement that throughout the firm. It's not just something, it's not what we call just paying lip service to things, it's actually implementing them. The other thing that we have is that we want to comply with the FATF recommendations in particular. So when it comes to, we have unregulated markets, so where there isn't any regulation in certain parts of the world, we have minimum standards of compliance that we implement. So we call that, what we call that is the .com model, because these countries don't actually have any type of crypto regulation. So what we want to do is we want to create a minimum level standard of not only compliance, but risk controls that we have in place to protect the users ultimately. And these follow in line with not only the FATF recommendations, particularly for virtual assets, but we also now, recently there's been an IOSCO CPSS consultation that went out, where, it asks for, what do you think should the minimum standards be? We comply with those as well. And one of the things that we very much are proponents for is always using our voice for good. So we always contribute where we can to public consultations. And if you go on our website, you can see our contribution and where we put consultations in. So recently we've done one in IOSCO. We've also done an Omani consultation. And we believe that because we are the biggest and we have so much experience, we should utilize that experience to help benefit and protect users going forward. And when you look at the regulated markets, not only do we try and meet the minimum standards, it's, again, not about lip service and meeting the very, very minimal standards. It's complying with them. It's enhancing our program consistently to be dynamically compliant from a compliance perspective and a risk perspective. And if we think that we have come up with a control that can benefit the rest of the environment, we will put it forward as a potential option. So it's using our voice in the most positive of way, because ultimately at the end of the day, we're all in this together. We're all in the crypto ecosystem. And if one of us brings the name down, unfortunately, as we've seen in the past, it's bad for the entire environment.
Yeah, no, you are absolutely true. We have all to be working towards common goals and making this industry a better, secure place, and kind of, gain back a positive reputation, because unfortunately, like last year was really intense, and all of this year also felt, this reputational damage that was important. So yeah, we need to work towards this goal. When it comes to Dubai, you mentioned before mapping the regulatory landscape. VARA has the first regulatory authority for virtual asset. So can you tell me more on how has VARA's involvement affected the compliance landscape for crypto exchanges in the region, and what are the key compliance considerations when operating within the UAE?
Sure. So my Dubai entity, my VARA entity, holds a very special place within my heart personally. I call it my little baby, particularly because I started the application when the law first came out and when I was actually in a consulting position. And now I've seen it through all the way end to end where we're operational. So again, it holds a little place in my heart. One of the things that I really love, having come from Europe in particular, is the regulators, not only within the UAE, but particularly with VARA, are extremely open to listening and learning. It's very much a two-way conversation, as opposed to regulators telling you what to do and you being petrified of them. Because ultimately, people who sit as regulators may not fully understand how the asset itself is traded. They may not understand the nuances associated with the underlying asset. And that's why it's really important to be able to have that discussion. And VARA did this really well. So before they implemented their rule books, and they have, I think it's either 12 or 13 now, I always forget because they're always sending out a new rule book. They had what we call plenary sessions. So they got all the big players round the table for every single rule book they were drafting with a law firm. And they said, these are the principles. So one of the things that they did compared with other regulators is instead of putting a rules-based approach, they put a principles-based approach, which means there is some flexibility around how you interpret the rules. But as long as you meet the spirit of the principle, that's far more important. So they hosted all of these roundtables. They got all of the players together. And basically they said, for a virtual asset, does this type of rule make sense? And in some cases, we said, yes, absolutely, it makes sense. And in some cases, it didn't make sense. Because if you look at the way that certain rule books have been written, a lot of people have just taken virtual assets as an additional asset class and just tried to put a round peg in a square hole. Right? You can't compare things. It doesn't work, right? Apples and oranges, it's not the same thing, right? So you can't look at a derivative on a bond, for example, as the same thing as a virtual asset. So this is where VARA has done really, really well. It had those sessions, it listened to us. And the reason why we know they listened to us is because they showed us this is what we were thinking. And then when the final rules came out, actually they had listened to us and they had changed the rules accordingly for us, for example. So that was fantastic. They also have separated the rule books. So they have compulsory rule books that everyone has to comply with. And then you can dip in and out depending on the type of activity that you offer. So for example, I have an exchange here in Dubai, but my exchange is also a broker dealer, which is something very new to the entire world. You're not really allowed to be a broker dealer as well as an exchange. It's either or traditionally. Now, the reason why this works really, really well is for financial institutions, most people will not want to execute large orders on exchange, on a central limit order book, because that can create market abuse. Because if you see a big order on an exchange, people will start worrying, why is there a big order being executed? So you can utilize the broker-dealer part of your license and do an OTC transaction, again, in line with the broker-dealer rule book, to execute. So being able to have that flexibility allows you to offer your services not only to retail users, but also to corporate users in the most comprehensive of ways, which is something no other regulator has been able to do as of yet. And then also, considerations that are really important from a UAE perspective is ensuring the robustness of the program that you have in place. Not only must the program be robust, but it needs to be transparent. It needs to be operationalized in a way that will not constrict how you operate. And VARA really took this into consideration. And it's not me hating on the other regulators. I'll be very, very honest. I have regulatory applications in other parts of the world, but the fact they've listened to us, they've taken into account the nuances of the virtual asset space in particular, and it's directly come from leadership. Right? Ultimately speaking, the Sheikh of the country has issued down the decree that we need to have regulators and we need to have people within the space who understand the importance of blockchain, Web3, and its adoption for the benefit of the entire economy. You definitely have seen it trickle down within VARA. I will say this, the FSRA in the ADGM is a superb regulator. It's very good at what it does, and it gives you the flexibility and the option to invest to have a business that you can invest in TradFi assets as well as virtual assets, right? So that's where that regulator, for example, allows you something that VARA won't, because VARA is just virtual assets. So it'll be an interesting time to see where, as we see the ecosystem grow, where are people going to move? Are they going to stay in the FSRA? Are they going to come to VARA? Are they going to have applications in both? Yeah, but ultimately, at the end of the day, it's beneficial to the UAE overall, and that's all really what I care about.
Yeah, no, but you're absolutely right, and you're not the first person I hear saying that VARA has a very receptive ears, and they're really listening to the need of the businesses. And this is very important, because there is no worse thing when you have a regulator that goes for his own path, not knowing what challenges and struggles businesses have. and don't communicate with each other, because usually it never really works out that well.
Yeah. And they're very, and I love the fact that they're very open to listening and learning. They're always constantly hosting roundtables. They had 3 roundtables a few weeks ago at the Dubai Blockchain Future Summit. They want to hear what we think. They want to implement that accordingly, because they want to be ahead of the curve, right? Ultimately speaking. So that's a great way to be a regulator these days.
Yeah. So well done, Bara, and
yes.
Good luck to the new CEO.
Yes, absolutely. Listen, he was during the plenary sessions, Matthew White. He knows what he's doing. He's very smart. He understands things very well. So we're all looking forward to working with him.
Amazing. Yeah. And to meet him somewhere in Dubai, I'm sure there will be opportunity at some events. So we're almost there, closing our session. Last, I would like to touch with you on future of compliance in crypto and innovation. So my first question is, looking ahead, how do you see compliance evolving in the cryptocurrency industry, and how can exchanges strike a balance between regulatory compliance and fostering innovation?
Sure. So again, we have a very big position to play as the world's largest exchange, right? Ultimately, everybody looks up to us and what we're implementing. And given my position within the regulated space, it's really, really important for me to send that message across to the rest of the teams. And we have this across all regulated regional heads, that being compliant is really important. Like, it's a minimum standard that we have to meet. But we also are user focused. Ultimately, as a Binance employee, one of our core values is always to be user focused. So we work together with the business very, very closely. You can't be a compliance officer or a compliance team member, or even a risk team member, in isolation. And this is how I try and say to people, ultimately, as the second line of defense, if you don't have a business, they don't need you. You don't have a job at the end of the day. Right? So our job is fully reliant on the business. If the business isn't doing well, there's no need to have a second line of defense. So that's why you have to constantly work together. You come up with ways, and again, how I explain it, you have a box. The box is where all the rules are. If you step outside of the box, you're doing things illegally, and we're never going to do those things. I tell my team all the time, and they always laugh at me. I don't look good in orange. I'm not going to jail for anyone. Okay. So you stay within the box. You do everything within the box, because that's where the rules are. You can contort yourself within the box, right? Because you're not breaking rules. You're coming up with strategic ways to implement rules. And if they pass the regulator, and the regulator understands that you're doing this, because you also have to be user focused at the same time, because nobody wants to go online and set up an account and it takes you 2 days to set up an account. Give me, your date of birth, what's your blood type, what's your eye color. It doesn't work like that. You have to be adaptive. You have to understand where technology is. And that's where I see things moving forward within the crypto industry stage. You're not only being compliant, but you're also being user focused. And then you have to look outside the traditional cryptocurrency world. You move towards a principles-based approach. So anyone who's rules-based approach, as great as it was back in the day, it's not going to work moving forward. You have to adapt to the fact that we are now a global business. If you had a rule saying that, you work in the GCC, and anyone who is a customer outside of the GCC, for example, is a high-risk client and has to be EDD'd, it doesn't work that way, because we're so commingled within the world. Like, you're European, you live within the UAE. Why should I automatically treat you as high risk? It doesn't make any sense just because you're European. But if you look at it from a principles-based approach, we can adapt accordingly. And then we have to look outside, again, traditional assets. You have to look at things like DeFi. You have to look at things like DLT. You have to look at where you can transfer the principles associated with current legislation into a different asset class. And it's really important to strike the balance between ultimately having compliance to protect users, but not having them scared, right? You don't want them running towards the darknet. You don't want them hiding away. You want to bring them into the light, as we call it, but you don't want to constrain innovation in particular. So you have to foster that relationship You have to implement protocols, you have to implement principle-based approaches, but you also always have to have the user at the front of your mind in order to ensure that their journey through the crypto space is nothing scary and they come along for the ride with you.
Yeah, no, I completely agree. And it sounds like the way forward. And in about way forward, you just mentioned DeFi. So I wanted to ask, when it comes to DeFi compliance, because it's a different thing. Can you already anticipate trends and challenges for the coming years?
Yeah, I mean, I've been on quite a few panels just to, because it's crypto month, October, within Dubai, and we've been here on multiple panels specifically talking about DeFi, and we can see already the push to have DeFi regulations. But again, DeFi is a completely different animal. If I'm very honest, it's not an animal I fully understand. Yeah, because it goes above my head, some of the protocols. But you have legislation that's already come into place. So if you look at the ADGM, I think 2 weeks ago, they implemented their DLT legislation. So it's already coming. You can already foresee it. They put in place principles. But again, it goes back to the same thing over and over again. If you want to protect users who are utilizing DeFi protocols, you have to make sure that you don't stifle innovation and you don't scare them away. Because if it's too comprehensive and you don't fully understand what the underlying risk is from a comprehensive perspective, people are just going to run away and they're going to go and use the dark net, and it becomes worse for the whole world. So you have to foster innovation, you have to bring people along, you have to consult with them on DeFi regulation, and you have to realize DeFi is not the same as virtual assets. It's a different type of technology, and you can transfer over certain principle regulations, but some things will not work. So don't, again, try and fit a square peg in a round hole. That would be my ultimate kind of message for DeFi regulation.
Yeah, no, I completely hear you and agree 100%. Meera, what to say? It was such an amazing conversation with you. So insightful. Thank you very much for being with us today.
Thank you so much. Really honored, and looking forward to seeing you again soon.
Yeah, me too. Have a lovely day, and
You too.
yeah, we'll catch up soon. Thank you.
Bye.
Bye.